Now, really what happens here, and we'll talk about stuff, is that the client claimed credits on amounts that it didn't actually pay. And if you know how 78 sub 4 of the Act works, you don't really get a deduction for expenses you incur if you don't actually pay them. So if, let's say you do work for me, and I say, look, I don't have a lot of money, so I'll give you we'll pay you $10,000 a month, but we're only going to give you $5,000 cash, and we're going to owe you the other $5,000. So you see this happen all the time. You're going to have to live on, and once this product takes off and we start selling it, don't worry, I'm going to pay you your back wages plus a big bonus, you know. And if you got nothing better to do, you'll sure, you know, at least I got a job. Let's go ahead and roll the dice. So I see that happen a lot. What you're supposed to do then is you want to claim all of the expenses in the year that the work was done. Okay, so you want to use what it's called an accrual basis. So if in that scenario I say, let's say we're going to make it easy, $10,000 a month I'm going to pay, you're going to earn, but I'm only going to give you $5,000 in cash. So I'm going to owe you $5,000. So at the end of the year, there's $60,000 in paid wages and $60,000 of incurred wages that I owe you, and we'll assume you're all SR&ED. The way I'm supposed to claim that is I claim all $120,000. I claim, assuming you're not specified employee, I claim $60,000 on line 305. Wages non-specified employee, and I claim another $60,000 on line 315 of the T61. Wages incurred in the year not paid within 180 days a year end. Okay? And that doesn't go anywhere. It doesn't form part of the pool. It just sits there. This number sits there, but the CRA keeps track of it. And they have the chance to review you. So when they come in to review the 661, they're not looking for 60,000 wages. They're looking to review support 120,000 of wages at the end of the day. What did you do? Did the work all, I'm assuming that it all meets it. If in any future period, I can show here's the withholdings now for the taxes for that individual as part of that $60,000 I owe them, in the year that I pay it, or within 180 days a year end, I can basically get that amount as a qualified expenditure. So what I effectively use is an anti-avoidance provision, 78 sub 4 of the Act, as a tax planning tool. Because very often I see clients who leave their job after 20, 30 years in industry, you know, they're using their life savings, they got an idea, they want to start their own business, and the first year or two they work 3,000 hours a year, and guess how much they pay themselves? So, whoa, how do you live on $11,000 a year or whatever? They pay for food, gas, they don't even buy clothes. Like, they live lean and mean, and yet they're doing $300,000 worth of work. So typically what I'll say is, look, okay, you paid yourself $12,000, but you owe yourself another $230,000 because you did $240,000 worth of work during the year. We're going to get this all reviewed that you really did $240,000 worth of work. No problem. You worked 3,000 hours, and you used to make more than that out in the industry, so there's really no argument there. And in any future period, 3 or 4 years from now, when you take off and you're owed $1 million, we can just pay you the taxes on that, and you're going to get all your credits, right? Whereas you can't go back past 18 months and go and claim on a future one, and you're limited to 5 times YMP a year, roughly $250,000. You can't pay yourself $1 million a year and get shred credits on it any other way. All right? So again, unpaid amounts is important. If you never pay yourself, you don't get the credit, and that was the part here. You can't get credits on wages that you never pay. Okay? So owing it says maybe we have to pay you in the future, and we'll review the work, you know, just to make sure it falls in line, but until they see the T4 slip with the withholdings, you're not going to get your money. Right? They got to get their money in the hedge, then they pay it back out, which is the way that the system tends to work. Once you understand that, it's actually fairly easy. Data kinetics. So this one's probably